Since September, we have been notifying that according to our analysis, there might be a very big downfall that is pending in the market. Well, when we notified in September, the market was trading at 26,000. Then in October, when the market went to 25,000 as well, we did notify on our channels that we still believe that there is a big downfall coming in. And if you haven't exited the market, according to our analysis, this is not an investment advice, you can exit the market still. And now the market is at 23,000 levels. It also went below 23,000 within January. Now let's talk about the fact, but why do we still think that there is a very big downfall still left? And this is just the beginning of the downfall. Let's analyze this in this video. So first, let's talk about how were we able to notify. So this chart is basically known as the inverted yield curve, and this is the only technical indicator out there that tells most of the recessions accurately. It predicted the 2020 COVID recession as well. And we can see here currently that it was negative for more than 1 year. That has never happened in the inverted yield curve, and it is now back up and positive. If we see since 1990, the recession only occurs when this chart is recovering from a negative position. And if we look here currently, that in previous recessions, it usually takes 3 to 8 months. जब वो positive आ जाती है, उसके within 3 to 8 months के अंदर stock markets, economies, हर जगह effect आना दिखने लग जाता है. It went positive in September. It means its effect should be by December or by April, May maximum. And even there is another economist called Harry Dent who believes that the market will go down more than 80%. And he believes that the Nvidia stock will be available at 90 to 98% discount. And even if we look that how other investors are performing in the market right now, well, if I talk about Warren Buffett, the legend of stock market investing, he has been consistently taking out money from the stock market, and his pile has went above $300 billion. It has went to $325 billion. This is a very high position in cash, and they've never ever had this amount of cash in their portfolio. We've already made a detailed video on Warren Buffett. Even Robert Kiyosaki, the author of Rich Dad Poor Dad, has been saying from a long time that there is a very big stock market crash pending. And recently he tweeted that it has started now. And if we move on to other facts like interest rate cuts, yes, interest rate cuts are also somewhat of a technical indicator. Why? Because whenever interest rate cuts happen, it usually gives us two scenarios, that it will be either a hard landing or a soft landing. Well, since 1990, we have been experiencing a hard landing in the stock market and economies as well. This actually can be one of the worst economic crashes that we might have ever witnessed. Why? Because we have not experienced this amount of interest rates from a long time, and plus there is a lot of pressure from the newly elected US President Trump to the Feds, and he's consistently firing at them that they should cut the interest rate cuts. Why? Because his manifesto believes in that he should increase the confidence and courage for the borrowers, and it can only happen if the interest rates are down, not high. But Powell, the head of the Feds, have been consistently saying that he cannot fire me, that he and the government are two separate entities and the economy is not run by politics. अगर हम ये सारी चीजें हटा भी दें, if we look at the basic chart patterns as well of Nifty, we can clearly see that Nifty has given a breakout right here, and it has to increase. As of 31st January, it has to increase nearly 4 to 5% to re-enter this bullish trend. And if you look at Nasdaq as well, Nasdaq and Nifty have almost been showing the same type of bullish trend and bullish channel. But the second it comes out, we might witness a very big downfall in the market. Also, to add to this, everyone has been lately talking about death cross. What is that? Whenever 50 moving average crosses the 200 moving average in an upside called as golden cross, and in a downside a death cross, it results in a very big movement sometimes. If you look in 2020, the golden cross did happen in Nifty and it went on to climb till 26,000. Now the moving averages have shown a death cross, which can be prominent. And even if we look at the RSI for Nifty, we can clearly see that it is going into a bearish trend right now. See, but the point is, what is the solution? Well, in September as well, we notified that we don't hold any stocks in the stock market We have completely exited the Indian stock market as of now, and we believe that the only way to keep your portfolio healthy and to park your money somewhere is right now gold. Gold might be the best option right now, or even debt. Because if we see here, gold since September have given a rise above 10%. People following our analysis would have been getting above 10% return by now in their portfolios. But this is not an investment advice video. This is just our analysis. Please do your own analysis before following anyone else's. This is how we see the market going. Please don't blindly follow us. Please do your own analysis before making any investment anywhere. Also, do remember to have a healthy portfolio, which is through diversification, to have consistent returns. Till then, don't forget to have a good day, and thank you so much.